thanks everybody for jumping on today. Our monthly market insights. Nora is actually taking some time with her family, so she's on vacation this week. And so this is really just kind of be me talking, giving my opinion of kind of what's going on in the markets, talk about some of the things that are currently happening and kind of what our outlook is over the next couple of months. And so kind of the biggest news that's happening is the new round of stimulus. So there's a new round of about $1.9 trillion in stimulus that is set to come on board. And kind of some of the questions that we've been receiving from clients has been, what is the outlook on the markets because of this? A lot of talk right now about inflation, hyperinflation. What does that mean for portfolios? What are we doing at Bull Financial Group? And what should people be doing in general? And so we're going to talk a little bit about that. Right now, if we do pump another $1.9 trillion into the market, one of the things that is really kind of hard to argue with would be that the dollar is going to continue to get devalued. We've seen it over the last year with the previous rounds of stimulus that the dollar gets devalued. We've seen things like commodities, gold, copper, some resources. Those tend to go in the opposite direction. Those tend to go up. And then some of people's new most favorite thing to invest in, Bitcoin, also seems to be reacting inversely to a lot of the stimulus talks. So what does it mean for portfolios, and what should you be doing in your own portfolio? One of the things we've been talking about it on these monthly market insights with our clients, really every time we get the opportunity to, is what are you doing with your cash, right? There's a lot of research right now that shows that Americans over the last year have been spending less. Savings rates are up, debt rates are down. Those are all good things because people, when they get a little bit scared about the economy, not sure if they're going to lose their job, they start to save more money, which almost seems counterintuitive. You think with all the job loss, people would have less money, but people tend to, and the same thing happened in 2008, hold on to more of their cash when we get in moments like these. Well, when we do see lots of dollars being printed in order to pump the economy full of cash, we do believe that inflation is on the horizon. The Fed keeps trying to say that they're going to keep the interest rate down, but ultimately there's only so much they can do when they're also printing just as much money. So what that means for you is we do not recommend sitting on a lot of cash, right? And typically what we recommend for clients is keep about $10,000 in your savings account. All other cash should be working for you. And there's a couple of different ways to go about doing that. CDs, money markets, we're not a big fan of those. Really, really low interest rates, costs associated with it, lock up your money, not a lot of return. So we typically recommend for our clients to put money in a brokerage account, about 30% equity, 70% fixed income. Obviously, your structure, your portfolio should be tailored to you, but we want our clients' money to be working for them. We want their cash to be working for them. We try and target like a 3 to 5% return. That way, right, when inflation does happen, the price of stocks tends to go up accordingly, and we want people's cash to be working for them so that their savings is growing while inflation is going on. People often think that having a lot of money sitting in cash is a good thing, but really it is the most risky place to put money because you're guaranteeing a loss. You need to make sure you're keeping up with inflation. The Fed is saying that right now they're targeting a 2% inflation rate. So if you're not earning at least 2%, you're losing money. Additionally, when the Fed says they're targeting 2%, that's an average. And so we've had some years recently where the inflation rate's been under 2%. And so to get an average, that means we could have a 3-4% inflation rate. And so you want to have your money at least earning that. If we look at some other times we pumped this amount of cash into the system post-World War II, we saw double-digit inflation rates. And so we want to protect our clients and really kind of give you the knowledge to say you should have your cash working for you in some type of brokerage account so that you're not losing money to inflation. Now, it needs to be extremely safe, right? It needs to be not very volatile. So don't go put in the S&P 500. That would be a bad idea, right? But have your money in something conservative that's going to be working for you. That's kind of the most near-term thing that you can do. to protect against inflation and all of the stimulus being put into the economy. The other thing that we're seeing with the new round of stimulus coming in the economy is a lot of it is going towards government spending. And what we've been telling people and kind of what the research is showing is the previous rounds of stimulus were going to businesses, restaurants, right? All things that we understand that, hey, these service industries, hotels, airlines, right? They don't have as much business. So this cash is being pumped in the system to make sure that they're holding on to their employees. Right? When cash goes to businesses, that's what the government intends for it to do. Always there's going to be bad actors, but that was kind of the intent behind it, right? Push money to businesses. Business will keep people on the payroll. They incentivized businesses that if they kept the same amount of people were actually hired, that they would forgive the debt. So there was a lot of incentives tied to keeping people employed. Well, with this round of stimulus, the idea is that it goes to government. And someone who works in the government as a military reservist and someone who knows a lot of people in the government, over the last year, we've seen very little, if any, government employees being laid off, right? Governments are not seeing the same impact that hotel industries and restaurant industries are seeing. So really, this cash is not going to go to help people stay employed because those same people have been employed this entire time. And so really this cash would supposedly just go to make government's balance sheets better. So when it comes to will we see as big of a direct impact on the markets and on kind of the overall economy, my kind of conclusion is probably not, because all these people have been employed through the pandemic. Right? They've been working from home, but they've still been getting paid. And so when we give them stimulus, I don't know that we're going to see a big uptick in that. We're just going to make some government balance sheets a little bit better. That's a little bit different than kind of some of the first couple rounds of stimulus that went directly to businesses. And oh, by the way, we have not even used all of that money yet. So there's still hundreds of billions of dollars from the first couple rounds of stimulus that have been unspent. And now we're pumping even more money into the system. I really don't understand what we're doing. But I do know that we're going to oversupply the system with dollars, which will be a weakening of a dollar. So great places to have money invested is get it outside of bank systems, get it invested in the market. And then kind of some things that we're doing with our portfolios in the near term is international. If you look at year-to-date performance, asset classes that have been doing the best, small value, international small value. As the US dollar loses value, it takes more of our dollars to purchase international goods. And so we see international stock prices going up. So having money diversified across the globe is extremely important, especially in times like this. And then one of the best performers besides US small value has been emerging markets. And that is a lot of like your coppers, your commodity industries through a lot of developing countries. And so we believe that commodities will continue to be more valuable as the dollar continues to get devalued. So some of the changes that we're making in our portfolios as we rebalance this year is taking some money off the table from some of the U.S. Growth, some of the S&P 500, some of the NASDAQ that we've had. Both of those positions have done really well. And so just saying, hey, you know what? Those positions are high. Let's sell while they're high. Let's buy some of the other positions while they're low, and let's ride the wave up. Most investors, they know they should sell high and buy low, but it's really, really hard to. And that's why you see that things like the GameStop just kind of hoopla that happened last month where people rode GameStop all the way to the top. I hope they sold at the top, but they probably didn't. They rode it all the way down. Same with Bitcoin, right? If you've got a lot of money invested in Bitcoin, you want to sell it while it's high, not while it's low. Speaking of Bitcoin, it is something that has been, people see as a hedge for currency. As the US dollar does get devalued, maybe a good place to go is Bitcoin. People also think that maybe the government's being destabilized by having all this money in the economy. Not sure I'd go that far, but that investing in Bitcoin specifically would be a great way to kind of hedge some of that risk. I always tell people with Bitcoin, there's really kind of two reasons to invest in Bitcoin, right? And I want you people to think about this deeply, right? So one of the newest things that's going on in the investment world are these ESG, or environmentally, socially, and governmentally responsible exchange traded funds, which supposedly fund managers going through and finding companies that adhere to some type of religious, Christianity, Islamic, Catholic, some type of religious standard, and saying these companies follow that more closely. And so let's build a fund full of those companies. It's kind of been all the rage of the last year. Personally, I think it's just a marketing technique for a lot of these big banks to create new funds and try and steal some of your money and put them in there, because I doubt anyone's going through and doing a deep dive on how truly environmentally, socially, and governmentally responsible some of these companies are. But it's been the rage lately. And so when we see people moving all their money that way, we also see people at the same time put money in Bitcoin, which I think is ironic, because there's really two people that are using Bitcoin, right? There's people that are trying to get rich quick, and they really think it's a great place to store value, right? Just like cash. They want to invest in it, have it go up, sell high, and so they're timing it. But they don't really have any intention of using Bitcoin for what it's currently kind of being marketed as, and that would be an alternative exchange, right? A way to exchange goods and determine a fair market price, and do so using Bitcoin. Well, the only people that I'm really familiar with, and really the research shows, it's the only people using it to exchange goods and services and use it as a currency are criminals, people on the black market, and people trying to avoid taxes. So you've got three essentially criminal groups trying to utilize Bitcoin as a means of exchange, while everyone else uses it to try and get rich quick. And so when people are trying to get rich quick and they boost the value, they're actually giving a lot of criminals and criminal networks more cash, right, to go do more harm. Yet at the same time, people are also increasing their investments in ESG funds. I think the whole thing's ironic. But know that when you do invest in Bitcoin, if that's something that you're considering, or really any type of cryptocurrency, that you have that in the back of your mind, that you've really thought about that in depth, and you've said, hey, I want to make this move for whatever reason, that you're taking both the I don't know, socially responsible approach to it and thinking through that, as well as understanding that, you know, I really need to sell this at the right time while the market's high, because no one knows if or when the bottom would fall out. And so I always urge clients with caution to do that. I've been getting a lot of questions, just how much should they put in Bitcoin or any cryptocurrency? It's not information I really feel comfortable discussing, because it's just like going to Vegas. You're taking a lot of risk because it just is not truly vetted. So think about that when you're going through those things. So that's kind of everything I want to talk about in terms of the questions that we've been receiving from clients over the last month. What does all this stimulus mean? A little bit about cryptocurrency. What is Bolt specifically doing for clients? Again, we're trying to take some of the money off the table from some of the NASDAQ or technologies funds that have been doing extremely well over the last couple really years, and also the S&P 500, which has done extremely well over the last decade. And as the dollar gets devalued, moving some of those, some of that portion, some of that gain, rebalancing it back to its current weight in our portfolio, and using that cash to buy things that were discounted over the last several years, and things that we see a good outlook on because of the dollar being devalued. And that would be small value, both internationally and domestically, and then emerging markets. So if you have any questions about your portfolio, or want to meet with us and talk about what we're doing, be happy to do so. If not, we'll open it up to questions in the chat. So a good question came in that says, what is the S&P 500 and what is the outlook on that? So the S&P 500, think of it as the Fortune 500 companies of America, right? So oftentimes people look at, or they'll come to me and say, hey, how's the Dow doing today? And I always say the S&P 500 is a much better indicator of how the US market is doing than the Dow Jones. The Dow Jones Industrial Average was started in the late 19th century. And so it's certainly evolved. That involves about 30 kind of blue chip stocks, big blue chip stocks. The S&P 500 represents Fortune 500 companies of America. It's going to give you about 80% of the overall movement of the U.S. market. So really a good place to kind of start with the S&P 500. What we saw over the last kind of 2 decades with the S&P 500 was from 2000 to 2010, it was called the dead decade. And so we had in that moment the tech bubble bursting in the early 2000s. Then we went to 9/11, where we had the terrorism attacks. We saw a lot of people stop traveling, a lot of nervousness in society. And then in 2008, as we started to see a recovery, we saw the housing market crash because banks were doing scrupulous things and giving mortgages and to people that shouldn't have them. And so all of those things led to really 3 big drops over a decade. And so we had a flat decade. Well, what we saw during that same decade was US small value, emerging markets, international small value, international in general, drastically outperformed the S&P 500. They were all positive. If you had a balanced, diversified portfolio, you saw gains in your portfolio from 2000 to 2010. If you're invested in all the S&P 500, you did not see any gains for 10 years. Right? Really hard to stay invested and stay true to your principles when you don't make any money, taking on a lot of risk over a 10-year period. Right? 2010 to 2020 was a totally different decade. We saw the S&P 500 go gangbusters. The NASDAQ did extremely well. And so what we tell people is we're not sure what 2020 to 2030 hold, but it's best to have a diversified portfolio. And so we recommend having that diversification in there in case we do see a dead decade with all of the stimulus being pumped in the economy. With the coronavirus recession that we just went through, make sure you have a diversified portfolio is the best approach. Don't recommend putting all your eggs in one basket in just the S&P 500. Awesome. Well, don't see any more questions out there, but if you have anything, don't be afraid to reach out with a phone call or shoot me an email. These are always there to just kind of give you an idea of what we're thinking in the market and answer any questions that are lingering, and make sure that we are communicating with you, letting you know kind of the top 10 questions that we're receiving from clients throughout the month. So I hope you have a wonderful March. It's my birthday month, March 17th, St. Patty's Day. Look forward to celebrating that with the family. But I hope you all have a wonderful month. Starting to see a little bit more sunshine here in Ohio, which is always a great thing. Spring break's just around the corner. Make sure you're spending good time with your family. Hope all is well. Look forward to next month.